In the period, the BE deal was, as we disclosed, 265 million rand, and that certainly affected the headline earnings per share. So we're happy with the good flow through from 11% top line growth down to 14, 15% profit growth, and then into 15% HEPS. So I think the business is in pretty good shape.
Pretty good shape within a very tough operating environment, and the business, undoubtedly being squeezed by cost-sensitive consumers, specifically if you're looking at the OTC segment, but that business reflective of, the kind of pressure the companies come under, with operating profit on that division up a mere 1%. Comparing halves though, are we looking at a turnaround in terms of consumer behavior? Because the data we've seen on the economic front certainly suggestive of that.
Yeah, it's been a difficult market for the OTC side of the business. So one thing we did see was that there was some better uptake in the second half. So I'd say it was a bit of a tale of two halves, in that, particularly in the prescription segment, we showed significant volume growth, as well as the hospital segment. But in OTC, the markets that we compete in are still going backwards in volume, which is particularly concerning for us. We still see down trading to more affordable products. However, in that context, the brands that we have, like Panado, Citra-Soda, BioPlus, still gaining share, still being very strong. And I think, hopefully we'll start to see some better consumer recovery in the year ahead. But it's a difficult thing to measure at the moment.
Of course, that coming with a turn in the economy, overall economy itself. Until that happens, a strong reliance seems to be on volume growth in generics, ARVs, and hospital products as well. To what extent, though, is competition likely to curb that growth moving forward?
Well, the generic segment particularly has been highly competitive. So both in terms of the public sector, we've had to reduce price in some of the key antiretrovirals we see, which of course has improved access. So we've seen a lot more volume uptake in ARVs. We're hopefully well positioned for the next tender. We're a local manufacturer. We're empowered. We won the last tender on the basis of price, and we're hoping that going forward we'll at least get a share of the upcoming tender. So that should boost the generics and prescription pharmaceutical segment. In the private sector, hopefully Medicines Control Council will approve some of our new first-to-market generics, and that'll give more innovation into that particular category. But however, if we look at generics overall, in terms of market share data, we're growing very strongly in counting units, which is individual tablets and medicine measurables. So we're growing ahead of the market in volume, but in value there's been obviously some issues with some of the statin pricing, and as a consequence of that, our value share growth hasn't been quite as fast as some of our competitors. But we hope in the coming year that we'll correct that.
Of course, pricing power is an integral component here. One of the few businesses benefiting from a stronger rand has been yours. Margins up from 50.9 to 52.6%. To what extent are we looking at risk on your margins if the rand retreats?
Well, certainly for the pharmaceutical business and less so for the critical care business, a large portion of the active ingredient in South Africa is imported. And the active ingredient can constitute as much as 50% of the cost of the actual product. So with those active ingredients being dollar and euro denominated, tends to be about 65% euro, 35% dollar. There is a particular dependence on the strength of the rand. So yes, a strong rand is good for us. But certainly we're a strong local manufacturer as well in our liquids and tablets and capsules manufacturing plants here as well. The conversion costs are dependent on labor rates. Naturally, there's been the influence of electricity price hikes in our critical care factory. That's particularly important. And then the cost of water and other such commodities also affecting the way we operate in the coming year. But I think your point is sound, that a strong rand does benefit Adcock.
Yeah.